So you see the green on your screen, a nice, tidy profit. Your finger hovers over the mouse, and your gut screams, "Take it now before it's gone." You click, and a wave of relief washes over you. But then you watch. The trade doesn't just keep going. It skyrockets, turning into that monster move you've only dreamed of catching. Suddenly, the small profit you took feels like a loss. That painful itch to sell early isn't a trading problem, it's a human problem. We'll expose that psychological trap and show you how to master the legendary patience of Jesse Livermore to finally capture a life-changing big move. That feeling, the desperate need to lock in a small gain, is probably the most destructive habit in trading. It's an addiction to the quick satisfaction of being right, even if it's just for a moment. We've been conditioned to think that booking a profit, any profit, is a win. But what if that's the very thing guaranteeing your long-term failure? What if your biggest losses aren't from bad trades, but from the incredible profits you keep leaving on the table? It happens because our brains are wired to hate losing way more than we love winning. Behavioral scientists call it prospect theory. When you have an open profit, your brain doesn't see a potential windfall, it sees something you're about to lose. That unrealized gain turns into anxiety. You start to fear a normal pullback, seeing every little tick against you as proof your profit is about to vanish. This fear of giving back is what creates the itch to sell. So you sell. You take your small win and feel smart. But over time, you create a math problem that's impossible to solve. Your wins are always small, but you let your losses run to their full, painful size. 1 or 2 decent losses can wipe out dozens of those tiny wins, and your account goes nowhere. You're not being stopped out by the market, you're sabotaging yourself for a quick hit of emotional relief. This isn't a new problem. Jesse Livermore, one of the greatest speculators in history, built and lost fortunes over and over again before he finally conquered this exact demon. He realized his biggest breakthroughs didn't come from some secret indicator. They came from a total shift in his mindset. His philosophy is famously summed up by the idea that it wasn't his thinking that made him the big money, it was his sitting. Think about that. Not his brilliant analysis, not his perfect timing, his sitting. His ability to sit tight and tolerate the mental discomfort of holding a winning trade through its natural ups and downs. Livermore understood the goal isn't to be right often, it's to be right big. Anyone can catch a small move. But fortunes are made by capturing the huge, powerful trend that most traders are too antsy to ride. He learned to separate hope from patience. Amateurs hope when they're holding a losing trade, praying it comes back to even. Professionals use patience when holding a winning trade, giving it the time it needs to become a massive winner. Most traders do the exact opposite, they're patient with losers and impatient with winners. That's the core reason they fail. Livermore's epiphany was that the market doesn't reward constant action, it rewards disciplined patience. The waiting, the sitting, the doing nothing, that's where the real work is done. So how did Livermore actually learn to sit tight? He didn't just use willpower. He developed a set of core principles based on the market's own behavior, not his feelings. These ideas, pieced together from his writings, were designed to do 2 things: protect his capital without mercy and force him to hold on until the market itself gave a clear signal the trend was over. Let's break down this framework, the antidote to the itch to sell. First, he was ruthless about cutting losses. Livermore believed that if you enter a trade for a good reason, the market should prove you right fairly quickly. If you buy a stock at a breakout point and it immediately falls, your timing is wrong. Holding on is just substituting hope for evidence. Livermore's rule was to take the loss immediately. He's famous for saying, "The first loss is always the smallest and best loss." This keeps your losses small, so when you finally catch that big winner, it has a massive impact. Second, he learned to tell the difference between a normal pullback and a real warning sign. No trend moves in a straight line, they all have healthy pullbacks. The amateur sees this and panics, selling to protect their profit. The professional, following Livermore's principles, waits. The real test isn't the dip, it's what happens after the dip. If the stock bounces back and makes a new high, the trend is healthy, and you keep sitting. But if it rallies weakly and fails to pass its previous high, that's a sign of exhaustion. That is an objective signal from the market that momentum is fading. That's your cue to take the profit, not out of fear, but as a logical response to what the market is telling you. And his third principle was his ultimate line in the sand, respecting what he called pivotal points. These are significant price levels where the whole character of the market can change. His final exit rule was mechanical and absolute. If a stock in an uptrend violates a critical pivotal point on its way down, you sell. Period. No second guessing, no hoping for a bounce. Breaking that key level is a clear sign the underlying trend has changed, and it's time to protect the fortune you've patiently built. By combining these principles, Livermore created a framework that forced him to overcome his own impulses. It made his exit decisions logical, not emotional. If you find yourself constantly cutting winners short, maybe it's time to try a more systematic approach. Before we get to the final takeaway, hit that like button and subscribe. And in the comments below, let me know, what's the single biggest emotion that tempts you to cash out of a winning trade too early? Learning to hold your winners isn't about finding a new strategy, it's about becoming a new trader. It's about shifting your mindset from one that seeks comfort to one that embraces productive discomfort. That anxiety you feel holding a large open profit isn't a signal to sell, it's the price of admission for an extraordinary gain. But let's be clear, this isn't easy. Even the master, Jesse Livermore, wrestled with these demons his entire life. He made and lost fortunes multiple times. His story didn't have a storybook ending. Battling depression and financial ruin, he tragically took his own life in 1940. His life is both an inspiration and a powerful cautionary tale about the immense psychological toll of this game. His story teaches us that true success isn't about a magic formula. It's about a relentless commitment to a plan. A real win isn't just closing a trade in the green. A real win is following your plan flawlessly, whether the trade ends as a small loss, a small gain, or a home run. The data proves that long-term profits don't come from a high win rate of small scores. They come from a handful of massive winners you had the discipline to ride. The market doesn't know you have a profit. Your P&L is just a story you tell yourself. If that story is driven by fear, you'll always leave a fortune on the table. To master the art of the big move, you must master the art of sitting still. Anchor your decisions to objective market signals, not the noise of your own emotions. Stop trading your fear, and start trading your plan. That is how you stop being the person who gets out too early and become the trader who finally catches the move of a lifetime.